What's up, peeps? How you doing? This is Dr. Greg McLeod from Elite Traders University and my market heat map. So good to be with you here for this edition of Bulls versus Bears, the weekly Forex forecast. And it's so great to be with you here on this Friday, the 22nd of April, 2023. And we are going to be looking at actually Saturday. It's Saturday. So I'm recording it now so you can be ready and prepared for the week coming up. Okay, so I'm going to share my screen, go to a deep dive into what's going on here in the marketplace. So let me go ahead and share my screen and let you know that you can, if you ever want to learn how to trade professionally in 90 days or less and be able to pass those prop challenges or just compound your account using my proprietary McLeod trading method, then come to visit us at Elite Traders University, elitetradersuniversity.com. You can go ahead and there's a free ebook, income boost ebook. They'll give you some tips and hints and tricks on the Forex market. And also there's a free masterclass that you can sign up for by clicking and registering. And you can see my 4 pillars to 6 figures video as well. Okay, so let's go ahead and get to my top secret weapon for trading the market. It saves me tons of time without all the overwhelm. It's called My Market Heat Map. It's an arrangement of currency pairs by percentage change. It tells you what's hopping, what's popping, what's dropping, and what's not in the market. Real simple. Green is an uptrend, red's in a downtrend, and gray, stay away. Okay, and right now we're offering 50% off regular price. So normally $99.97 a month. Now it's only $49.79 paid annually. And it's just a full featured tool. In fact, when the market is hot and going right now, top Forex pairs, you can see we had Euro Aussie up 0.89%, Euro Kiwi up 0.77%, Pound Aussie up 0.68. At the other end of the spectrum, the Aussie pairs were all tanking. Aussie Swiss down 0.84%. Aussie dollar down 0.76%. Typically a risk-off day with the S&P actually closing down. And there's other, we have not just currencies, but also equities. I love looking at parallel markets, being able to look at what equities what the equities are doing. It tells me what the currency pairs are going to do and vice versa. And we can see that we had a relatively a dull market for this Friday. Okay, but there's also a whole suite of tools. This is like a Swiss Army knife. It's a one-stop shop because when I'm trading the market, I'm scalping big time, going really fast. I don't have time to jump from one market to another or to one website to another. So I created my market heat map as a one-stop shop, a one-stop place where you can find all the information that you need regarding the market. So I have put trader tools like charts, quotes, economic calendar, Forex TV, a financial news stream, market hours, technical analyzer and screener, national holidays, sentiment, currency correlations, Forex calculator, liquidity, Forex volatility, and much, much more. So I won't have to go jumping around to different websites. And so let me go ahead and go to one of my favorite and most overlooked tool that traders from around the world need to use, and professional traders, especially in the big institutions, use. And this is called the economic calendar, okay? So it's not the fancy flashing lights and arrows or anything, but it's really simple. It's flags with high impact items listed. And so we can look at what's going on for next week. We can click next week and we can see what's going on. And I sorted by high impact items because high impact news is what drives currency pairs. If you don't know what's going on in the news, I don't trade news, I don't pay attention to that, well, then you're missing out on a lot of opportunity. For instance, last week, I alerted my subscribers and my students about what was going on in the pound. The pound had many different economic announcements, which caused that currency pair to surge dramatically. And we were able to get a lot of pips from that. So if you're trading, Canadian dollar, when there's pound news going out, the institutions are in the pound and you're in the CAD and it's not moving. So you want to be where the party is. And this tells you where the party is. Okay, so right now we're looking at for the There seems to be no high impact items for Monday. We jump right to Tuesday, April 25th. And the news is so important. The news acts like think of the currency pairs and the stock market, different indices as little boats on a huge ocean. And when the news comes out, it's like a giant rock, a giant meteor coming out from outer space, hitting that water and creating massive ripples, okay? And those boats start moving and fluctuating. But the thing about it is, if there's, if it's a UK news rock, it's going to rock the GDP pairs, okay? And if it's a United States or American news rock that hits the water, it's going to affect the USD pairs. So we want to look at the flags. This is like fun with flags. Here it's real simple. You got the Australian flag there. Tells me that the Aussie pairs are going to be in play, okay? The first announcement we have is consumer price index. Anytime you see the word index, think of inflation, okay? And so CPI, we're looking at consumer inflation. QOQ is quarter on quarter. So they're comparing this quarter to last quarter, right? Sometimes they give you some guidance of what that will be. And that will be very, very helpful when they do that. And we can go ahead and adjust our time here. Okay. Inflation rate quarter on quarter. Previous number was 7.8%. Forecast a drop to 6.9. It's a high impact item. And that's going to be at 9:30 p.m. Eastern time on Tuesday, April 25th. So we want to either look at the Australian dollar on Monday. All the Australian pairs, Australian dollar based pairs sold off on Friday. So it'd be very interesting if they sold off in positioning ahead of this inflation report, and we could see dramatic moves in the Australian dollar. Now, when the announcement actually comes out during that time, I don't necessarily want to be in this pair at 9:30, but I want to look at an hour afterwards or a couple of days leading up to it, okay? And allow the institutions to take their positions. And we have, with the McLeod method, we have what we call the predictive function. And the predictive function allows you to get in the market 4, 5, 6 bars ahead of everybody else, and allows us to forecast where price will go. Now, if you don't have this indicator or you don't have this method, then trading the news will be very hazardous. And I recommend you just, stay out of the market, wait for an hour after it, and then take positions, or take positions leading up to and get out just before the announcement, an hour before, get out. But if you have the predictive function and you understand how it works, then you can very easily pick off this inflation data, okay? Next thing we'll look at is we've got some European data. We have a German flag. We have GfK consumer confidence as well. We're going to see increase from negative 29.5 to negative 27, which could be positive for the euro, because we have a German flag, and the flag in Germany is one of the German economy is one of the largest economies in the eurozone. Oh, and back when we look before, we do have the IFO business climate as well, supposed to rise from 93.3 to 94. That could also be positive for the euro. Okay, so that was on Monday. So we do have a high impact item on Monday. Okay, and then on at the 8:30 a.m. news cycle, there's 2 news cycles in the U.S. There's an 8:30 a.m. and a 10 a.m. news cycle. The 8:30 a.m. news cycle, the dollar, we have durable goods orders month on month, especially supposed to rise from negative 1% to positive 0.8. And contrary to popular belief, with the dollar, good news sometimes is negative for the dollar. Why? Because the dollar is a risk-off asset, and people usually run to the dollar when it's not safe to invest. Like if there is a meltdown, a financial crisis, a war, some type of natural disaster, some type of economic something that's crazy, a black swan event, the dollar is going to get stronger. And when times are good, then people will trade their dollars for stocks, for real estate. They exchange their dollars for assets that will give you more than 4% that the Treasury will give you, right? So it's different for the US dollar than any other currency. The Japanese yen is another one that, good news for Japan, doesn't necessarily make the yen get any stronger because they have a negative interest rate. But the dollar, the Swiss franc, and the yen usually rise when their economies are stronger. Okay. They don't, they go down when their economies are stronger. Okay. So it's just the opposite. So in this case, I would look at the euro as a possible, the anti-dollar. The euro is called the anti-dollar. So I would look at trading durable goods orders and maybe look at the long euro for this, but we'll look at a chart and actually see how we're going to tie in these fundamentals to actually technicals, right? This is the wind that's going to actually blow our technicals. Okay. And we have the Bank of Japan interest rate decision, and they've kept rates negative for a very long time. They have a ZIRP, or zero interest rate policy, that's been going on for over 2 decades. And it's probably unlikely that they're going to raise interest rates. They want their currency weak so they can encourage more exports. The Sony PlayStations, the Lexuses, the Toyotas, they benefit from a weaker currency. And the Japanese government, that's how they protect their exports, by having a weaker currency. And guess what? The United States helped them design that policy, so we can't really be mad at them, right? Next, we have some Italian data. European GDP growth rate. It's supposed to increase from negative 0.1 to 0.2. And seasonally, the European economy usually does well in March, April, May. The European economy is usually pretty good, and you usually see the euro kind of rally during this time. It's just a seasonality, springtime and people coming out from the winter stuff, and it's got kind of a growth kind of thing going on, right? So we have lots of data here. Growth rate, GDP growth rate out of Germany, though, is supposed to decrease, forecast from 0.9 to 0.3. Before that, we had year-on-year growth rate in Italy supposed to remain flat at 1.4%, but the GDP growth rate quarter-on-quarter is supposed to rise from negative 0.1 to 0.2, which is pretty huge, right? And I'm really not looking at the difference between the forecast, and I just know that the euro is going to be in play. If you're going to trade anything for the euro is going to be probably the big main story, because there's so much news surrounding the eurozone and the countries within the eurozone that I would look at that. I would pay special attention to what's going on there. Okay. We also have an inflation report coming out too on Friday. And then we have some US data, personal spending month on month, supposed to decrease from 0.2% to negative 0.1. And with higher interest rates and tighter credit conditions, that's understandable. And it's going to be backward looking. So it's going to compare February to March. And no, because April, we don't know, but April, it might have improved, is backward looking, but we won't know about April until May, and May numbers will show different. So personal income is supposed to drop from 0.3 to 0.2. If it does do that, that's going to be good news for the Fed. The Fed doesn't want you to have any money and don't want you to have a job, okay? Because if too many people have jobs and too many people make money, then that's inflationary. And so they'll raise interest rates until they can lower those numbers. And it looks like those rate hikes are biting with the layoffs and the decreased personal income. Okay. That's why it's really important for you guys to learn how to trade and make your own income, so you're not plugged into the system. So, you can make all the money you want, and you can, continue to live the lifestyle that you want, or live even trade up to a better lifestyle, and not to be part of these statistics where you have less money and you don't have a job because you are part of this number. Okay. So we want to get you beyond being a number. Okay. my shameless pitch for Elite Traders University, right? Okay, now let's go ahead. Now we've got our layout of the land. It's going to be a big story with Aussie up front, the euro, and they're going to have and the US dollar pairs as well. So let's take a look at the technicals. I want to start. I'm going to use TradingView. I'm going to use the US dollar index. The dollar index is a basket of currencies versus the US dollar. And the key here is, guys, that if you know how to trade the US dollar, then you know how to trade the majors, because the majors all have the dollar in them, whether it's Aussie versus the dollar, euro versus the dollar, pound versus the dollar, New Zealand dollar versus the US dollar. Then you have the dollar, US dollar versus the Canadian dollar, and the US dollar versus the Swiss franc, and the US dollar versus the Japanese yen. So if you know all those are dollar pairs, you know that when the dollar is weak, this is going to take down the euro, the Aussie, the New Zealand, and the pound. The chart's going to be going down while this is going up. So let's take a look at what's going on. We're going to go out to a big, like 50,000 foot view. I'm going out to the monthly and taking a big broad look at the market. And I have some support and resistance levels. Those are like my dailies, but we can put some monthlies in there, and I'll make them another color like red. You know, these are big levels that we're probably not going to see for a few years. I mean, these are like, 13-year lows, and you can just add those in. But I have these dailies already drawn in. We have some monthly highs as well in the 120 area. Looked like we were going to get there, and then we pulled back. But we do have a rising uptrend that's very significant, as we've been in a period of low interest rates for a really long time, since the 2008 financial crisis. We can see that, in the state of accommodation, lowering interest rates in order to, which weakens the dollar, makes the dollar worth less, and causes asset bubbles like rising stock markets and things like that. Now, when the dollar starts going up, guess what? It's the other way around. The stock market starts going down, and it starts getting choppy, right? Because people are holding on to their dollars. And so we can see that we've got lots of, we have an uptrend, and then we have this nascent, this kind of like downtrend that we have in line with this other rising trend line here, right? So we're like in a triangle, like in an indecision area where we have supply and demand meeting, and we're looking for some type of resolution, either a breakout to the upside or a breakdown to more lows. But let's move on down. We can see the trajectory is up with pullbacks against the trend. Let's move to a weekly chart. We drop down to a weekly chart, and we can see more granular. We can see these levels, these daily support and resistance levels, which I drew by hand. And it doesn't take very long. Just finding the wicks and sticking some lines on there to let you know what these levels are. It'll make more sense as you get down lower in time frame. We can see that after we've dropped, rates, interest rates have been taking a bite, but the rate of interest rate hikes have slowed down, and so now we've pulled back, and now we're moving sideways at the 101.82 area. We have a double bottom, which is usually bullish and could mean that we have another push higher in the US dollar. We would need to break some trend lines, and we could see maybe a push higher, maybe into the 105 area. Once we break this level, this supply line that's coming down off of the highs we saw back in October, or actually September. And we're just a little hair off right there, right? And move this one off on the wick there. And we can draw a tighter trend line on there as well from the high that we had on March 6th. And we're really, really close in there, right? So we've got support there. And so basically we're moving sideways and not much going on probably in the dollar-based pairs. Let's move on down to a daily chart where we can see where the action is on the daily. We can see that we got a nice bounce off the lows this week at around the 180 mark. And now we're making some higher highs and higher lows, still below the previous high of April 11th. And we're forming like a 5 days of consolidation. This narrow range, or NR5, usually resolves into some type of a breakout. We look for a breakout of 102.08 for a move higher, or we can continue to consolidate through it, maybe another 3 or 4 days sideways action. Bulls versus bears, you know, I am a longer term bullish, but short term neutral. We're not really moving anywhere here. Usually when you get multiple days sideways in the dollar, then it's always advantageous to maybe look at some of the cross rates, which I don't really follow too often, but like the Euro CAD or Aussie Kiwi, looking at cross rates. Sometimes the cross rates will trend when the dollar is not doing anything, as people have shifted their attention to other currency pairs when things seem to be a little choppy. But the chop is actually a great way to trade. When you're scalping, there's established support and resistance. It's really hard to get blown out by a trend because there's really not much of a one. Drop on down to a 4-hour chart. And I'm spending a little bit longer time on the dollar index than I normally do, because there's just, it really is like we're just moving very sideways. I think we just one drop and we're back at a level of support around the 101.72 area. And we're in the bottom there, so we could probably see a little bit of a rise. So let's go ahead and move right to the euro. The euro has news coming up, and we're going to EURJPY, and we're going to just look at let's go ahead and look there, and we can remove the drawings, and we go out to the monthly chart. And you can see that, while the US dollar has been moving sideways, the euro has been making some headway, moving higher on the monthly chart, it's in an uptrend. So I would be very cautious about trying to short the euro. I know even though it's a monthly chart, lots of green, this is basically bullish all of March, and it's been bullish all of April. We can draw some simple support and resistance here, classic support and resistance, or you can use fibs. That's another way we can do. We can take a fib from the high to the low and actually come up with some levels as well, right? And we can see we're sitting right at the 50% retracement, and we got high around 111, around 112. Yeah, 111.12, somewhere in there. Let me move that out of the way. Yeah, 111.1283, right? We're breaking through this level, so we can probably see move higher. Let's drop down to a weekly chart. And you can see that we have two areas of touch, 1, 2 to determine the line, and the third touch will be a test of the line. And so we can see we're in a pretty good trend on the weekly chart, making new highs. So it's fairly bullish. We look for buying opportunities in the direction of this strong trend. Drop down to a daily chart, and you can see that we've had some periods of pullback, rise, and you can see there's more green than red, right? For every maybe 3 or 4, every 2 or 1 or 2 red candles, there's going to be a stream of green candles. Shows that we're in a pretty good uptrend. Ideally, we'd like to come back down to the trend line support, give us a fresh set of downs. If you're a American football fan, it's like, this is like, third and 9, right? You'd like to get a first down so you can like restart and try to get a fresh perspective. Because right now if this was some type of channel support, we're above the top, we're in a channel, and we're at the top of the channel. We would like to get a low risk, high probability entry in the direction, off this support here. right? So bulls versus bears. I am bullish the euro dollar. I'd like to see some type of a pullback, and maybe we get some type of a Monday drop, which give us a nice little discount. And if we can get a discount, then we can pick up at there's some nice support. I mean, we're getting some nice support right now, but I'd like to get some type of a sell-off where we can get a discount. So I'm short-term bearish, but medium and long-term bullish, and for prices to continue to mosey on up to our 112.83 area. Okay. So let's go ahead and move on over to the pound. I don't think we had any GBP news. We had lots of it last week. It was a plethora of news. In fact, this is like one of the trades we took on this big bar down, fake move to the south side, Harami, and then boom, we just broke out of that box and trended up, and then came back down. So we're basically trading sideways in this wall drawing. But let me go back. I'm getting ahead of myself. If you go back to that weekly chart or monthly chart, the pound also too is in an uptrend, higher highs and higher lows. But if you look larger term, I said, well, Greg, I know it's short, it's long here, right? That line breaks, this thing collapses because we are in a really big downtrend. I tell you what, you try shorting it now, and you're probably going to lose your shirt, right? So it's always, like time, like comedy, it's all about timing. And if you get in short because it's going down, then you're losing money right now. So this is the short-term trend. This is the long-term trend. The long-term trend is sleep right now. And this is Jack the Beanstalk. While the giant is sleeping, Jack is going to grab him some golden goose and a harp and some other stuff. And then when the big downtrend awakes, then this will probably start back down again. Right now, we make hay while it's, for a short-term trader, we're going to trade in the direction of the short-term trend. For a long-term trader, we're just going to wait until this trend line breaks and then enter our shorts somewhere near resistance. And so that's how both can be right at the same time, right? And we can also do the same thing. We can take a fib from the high to the low, last swing, and we can see that we have, we're sitting right at the 50% retracement as well. And we have the 127.69 area as the next level of Fibonacci resistance. And we have trend line action coming in at the 134.25 area. That's like 700 pips away. Okay, but here we are, a little bit tighter here, and you draw these trend lines and you try to connect them to the wicks, and they move. So we have, after initial strength, we see we are making new highs, both smaller candles. So maybe this is weakening, getting a little tired, a little long in the tooth, and we could maybe see a break. But as long as we have green candles, we're above the trend line. We continue to look for the pound to appreciate versus the U.S. dollar, especially the U.S. dollar not really going anywhere, just kind of moving sideways. We can see that we go down to a daily chart. Small body candles, this is a whole day of dojis. Doji is the indecision candle. It looks like a cross, and it's the high and the low are relatively the same, and they close at a tie. So the bulls or the bears are not really winning, not really gaining on each other, and it's kind of moving kind of sideways. So not really a decisive action. We're in a box or in some type of a range box with highs in the 25.46 area, and we have lows coming in at the down here at the 23.49 area, and we're just kind of bouncing along. And you can drop down to a 4-hour chart. You can see that this is a range trade where we could have got long at 23.68. Got out at 25.47 for like 100 and like 150 pips or so, and it drops, and then we buy at the bottom and sell at the top. So you can do this for a while. This is like maybe some of the accumulation or distribution channel, but then one day it will break out. So you want to make sure you have stops in place to get you out. And with the a high, a lower high, we might be maybe a tendency for a move lower, but we're still stuck in a range, and there doesn't seem much, as long as the dollar hasn't dipped, we're probably going to stay in this range for a while. Okay, so bulls versus bears. I am constructively, I don't know, I have to be bullish because we have an uptrend, we haven't broke it. But if we do break it, I would say break the 2300 area, then we could start coming down, because we do have maybe a shoulder head shoulder formation, but we need confirmation. We need a break. And if we had predictive indicators, we would probably already have some type of an idea what this is going to do, right? Okay, the big the euro was our big one, had a lot of news on it, and it looks like we would see some further appreciation in the euro. The other currency we had, we were looking at, we did see some US data coming up, and we have lots of euro, lots of US, and we can just take another quick look at, we can look at another currency. Dollar CAD has been on fire, and big shout out to my Canadian trader friend Travis, and we were trading that together, and we were in here in that little red area, and it broke north. It was pretty amazing. When I do coaching with my students, and they're able to see the magic happen right before their eyes. That many traders and many gurus, they won't trade in front of their students, but I have no problem. We were in Vegas for 5 days, and I did live trading, and basically recovering my voice and my health from having way too much fun in Vegas with my tribe. And we're looking at doing it again in Puerto Vallarta. We're going to do that October 8th through the 13th. It's going to be a massive Pip-Palooza party, and we're going to learn about financial fortress, structuring our trading business to save on taxes. We're going to certify people to be certified ETU, Elite Traders University instructors. We are going to have more mindset coaching and framing and hypnosis to get the professional traders mindset installed. For those who didn't get it in Vegas, we're going to be doing that again by popular demand. There's going to be a wealth of things, including how to stack trades, pyramid trades, compound trading, growing small accounts, prop trading, how to master the prop trading contest, and much, much more. And we have wonderful, we're going to have great food. It's going to be a great resort, and it's just going to be, you can, as little as $700 a month for this. It's going to be a year-long mastermind, and you'll be coached by me privately for 2 hours a week. Seats and space are going to be very limited, because how many 2-hour slots do I have? But I find that my students who get an hour with me anyway privately in mentorship, their trading dramatically increases from being in my presence for 1 hour. We setting goals, we're going through trades together, and when they wrestle together with me, we're just going at it together on the charts. It's a powerful event, and when you can do that for 2 days a week, for 2 hours a week, for 52 weeks, you are going to be on fire. Definitely. You don't want to miss this opportunity. Currently, the price will double very shortly. So make sure, if you are interested, you reach out to Nichelle at elitetradersu.com to find out more about this wonderful opportunity to work closely with me, because one or two trades would have paid for the entire year-long Winner's Circle. It's called Winner's Circle Mastermind. The year-long mastermind. You don't want to miss it. It's going to be a beautiful Puerto Vallarta. It's going to kick off with weekly coaching and mindset coaching calls, and it's also going to entity structuring, business credit, setting up your company, and all that wonderful stuff. Okay, so let's. So again, if you're interested, email Nichelle, Nichelle at EliteTradersU.com. Okay, so dollar CAD. This was a really beautiful. We have it's in a big range too. We can see we're in a very, very, very big range. It hasn't really moved anywhere for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Okay. However, it's making a move now. If you drop down to a weekly chart, and you can see that this end, after dropping down into the support area right here, the support coming, in the like 13292, 3297, say like 3300 area, right? It goes horseshoes and hand grenades, that were in this area. And we made a higher low, and then boom, big blast off candle from 3347 to 3583, 100 pip move. Just drop on a daily, and you can see that this total takeoff, blast off. Doesn't look that big, but you take a measurement from that low to here, that's 251 pips. Right on the move from this support area. You can see all this zone of where price hadn't been able to penetrate this zone. It tried and tried and tried, and the buyer stepped in and pushed it up, right? And so now we have a nascent uptrend, right? In the context of a larger downtrend. I tell you what, you try to short that downtrend now, you're losing money on every bar, right? But if you look at the most recent price action, that's what we trade on the hard right edge. The right edge is what matters. What back here is helpful because we can look left and figure out some price targets. Like if we got long at the bottom and had a price target here, when we're out, we've made money. We look left again, and there's another price target that we can look at. And that target's right there. It's sitting right there. Just look left. Where people ask me, well, what's my next target? Look left. That's the next. And what's the next one? Right there. TP1, TP2, TP3, right? That doesn't mean toilet paper. Okay. So drop on down to 4-hour chart, and we can see, nice color change at a level of support, whole number, round number support. And it was just nice trend from the 14th all the way to the 23rd, 9 days where you just got long. Now, I know you can't hold in surge trader, you can't hold over the weekend, but I tell you what, if you got long on a Monday and let it go, you probably hit your 10%, right? Big congratulations to Jonathan out there. Jonathan, he works for me. He's my video technician guy. And just by watching my videos, he wound up passing the Surge Trader Challenge, and he got himself a $25,000 account. So big congratulations to Jonathan. Awesome. And congratulations to Amir, another, he's a prop trading guy, funded trader. Very cool. When you can pass those challenges and trade with other people's money, OPM, that's a good feeling. It's a really good feeling, especially when you have a system as robust as mine. Okay, and so bulls versus bears, definitely bullish on this. Even though there's no news on this right now, there is going to be some US dollar news coming up on Friday, and I can see that we are probably posturing this. Now, it's interesting the US dollar is going up versus the Canadian dollar because usually this currency pair is tied to oil. And I believe that oil, if we take a look at oil, going to take a U.S. oil, just the WTI crude. And yeah, we've been seeing that, yeah, crude has been falling. Go to the monthly chart. It's we have a higher high, but this is very interesting because we've got this monthly trend that's up here. Imagine we were down at zero, less than zero. And I mean, if we connect these two, I mean, we're like that, right? So, we haven't entered the summer driving season, demand for crude oil and stuff like that, but we're at a very pivotal point, right? That, with the dollar rising against Canadian dollar and oil down, we could be at some type of an inflection point where oil actually breaks out from here, right? So it's pretty tame there at the 77.91 area, and we haven't broken support. Oh no, a daily. Sorry for yawning, a little tired there. And then we can see that I mean, we're pulling. We would need a break above 83.53 would mean that we would we broke out, gapped up, filled the gap, and so I would say we need to get above this old resistance to be interested in oil again. But the current dollar sideways movement, because oil is priced in US dollars, and a higher dollar usually brings down the price of oil. In fact, you can kind of, this is kind of interesting because it's actually moving in the same direction. So some of those correlations, they break down. 4 hour, right? Okay, let's look at some other things. Let's look at the S&P 500. We'll wrap things up. We'll look at the SPX. I get SPX 500. Any one of them will work. Here's the 8 cap monthly chart. Still, still consolidate this little mess. We can't get out of its way. It's in an uptrend. And it's been monthly is up. Weekly has been kind of like sideways, hasn't really gone anywhere, pretty neutral, right? Looks like we have an inverted head and shoulders, but we kind of broke out. When we broke out, it was so like yawn, like, oh, not much velocity out of that, but it's still bullish, even though this week was negative. That's why we have a red candle there. Go to the daily, we're sitting on some support, so we can see a bounce next week. But as we get closer and closer to the end of April, we come close to what we call a May, sell in May and go away kind of thing that sometimes happens. According to the cyclical patterns, we can see May, we have these big sell-offs in May. So we could be setting up for a possible sell-off, little, triple top or head and shoulders, and we break out south, and we can see a big move down on the S&P 500 from May until about June, and then maybe see some movement back in like July for a summer rally. As people, traders are going away for spring holiday, they're going to the Hamptons, French Riviera, different places, and they park their money in US treasuries. So the dollar rises again, the treasuries, the interest rates fall, money's coming into the market. So it kind of creates this like cyclical thing that been happening for like 72 years, right? So now we're looking here, and you can see it's just really, really rocky. If you were some type of a trend holding trader, you would probably get seasick, right? We had a nice trend here. In several days, it's just not gone anywhere. But this looks kind of topping, looks kind of bearish. Bulls versus bears. Really, we're sitting on trend line support. We haven't broke it. So I'm short term bullish, medium term bearish. Okay. And we're just playing the range. Like it's waiting for something. Okay. And let's take a look at the NASDAQ. And the key of these indices is to establish your support and resistance levels. And if you're just trading them, short term trading them, then you just want, nice big push there. Harami is kind of bearish, but we haven't closed, so it's not finished yet. Here's our weekly chart. And if we took maybe a fib from here to here, you can see that we're sitting at the 38% retracement. Up, let go. We're sitting right there on top of there. Next level would take us to 13,565, and we're in an uptrend. We're making higher highs and higher lows, right? Well, you could make money on the short side, short term, but just remember that the trend is up, and you'll probably make more money on the upside than the downside. If you drop down to a daily, you can see that we're sitting at trend line support, and maybe we get a pop. We're at 12,985.70, and we're finding support in that. Lots of support hidden here in this around this 12,878 area. But we went from an uptrend to sideways, and we broke this trend line. So it might be interesting if we don't continue down for a bit. Okay, and let's take a look at Bitcoin. It has since it hit the 30,000 area, it's been pretty interesting. All drawings, and let's we just wicked out. Now we're at 27,330, and we can tell we go from the top to the bottom here. We're sitting at we hit the 23% retracement right smack on, and it dollar strength, if it kicks back in, we can see the Bitcoin drop or pull back a little bit, and it might be healthy, give people a chance to get back in it. Weekly chart, we can see big kind of engulfing candlestick pattern, which is not bullish. And this market trades on the weekend, so it's it's wiping out all the previous gains. Down to a daily chart, and we can see it's working its way down. We do have a nascent uptrend here, okay, that accelerated as people became more excited, and the angle steeped out. And then now we have this angle here, but we just broke that, right? We just broke that pretty solidly. And so we'll see if we get some type of rebounds, but we could go, we're just breaking Fibonacci levels. Probably not. I probably don't need that one, but this 27% retracement we hit, and now we're coming back down. So there is some nice support. That price that 19,698. And then the breakout, when we broke out above the high, was 24.94. So maybe we're heading back down there. This was like a channel, sideways channel. And sometimes when price breaks out, it returns to the scene of the crime. So we are short-term bullish, short-term bearish Bitcoin, medium-term bullish, right? That's if we can stay, we can hold the channel and not break back into the channel. Okay. And let's take a look at gold for Derek and for Joseph. XAUUSD. And we can remove all the drawings, move out to the monthly chart. And we can walk our way down from now. Maybe this triple top is the real deal. We get there. We're down at 1982, 92. And we've got support down here at 1600. And we have some little support areas here. And some old highs from 2011, right? And we've got some here, right? I'm just going to deal with the current intermediate ones. We could draw the rest of them out later. But with that, and dropping down to a weekly, we can see that we do have an uptrend. Still, higher highs and higher lows. We don't have a lower high or a lower low. So be careful with the short, right? And really, we don't have a candle break. We actually broke that trend line. And we really don't have a trend line here because we don't have a completed candle on the other side of that. We need another completed candle, but I'm just going to fudge it. Okay, so all you technical, well, Greg drew that line wrong because there's not a candle on the other side. I go, yeah, I'm letting you know that I'm just putting it there. But ordinarily, I would want to have another candle, a higher candle that I could connect. I'm just putting that on there, right? That just to show that the direction we're moving is up, right? And we haven't broken it. You could say that, okay, we broke it here, and one candle dangle. The one candle dangle, usually sometimes you get this like throw over and prices jumps up. It sucks people into those short, and then it goes higher. So I'm not really sold on the bearish scenario for gold. I'm still bullish, and going to a daily chart. Now that may make me a little bit more bearish, break the trend line. Now you got a bunch of candles moving sideways. I'd like to see a candle break the lows there, right? And maybe you could all right, I'll throw an indicator on. I'm going to throw a 20 moving average on there. How about that? That help? Exponential moving average, sure. We can do that. Moving average exponential. And I'm going to make that a 20, 21 or something like that. We can use a fib number, right? Input. I'm going to throw a 21. 21, blackjack, baby. Style. Make it thicker, right? Put some meat on that bone. Like it thick, right? Right. So it's up, it's down, it's up, and we're hugging it. We haven't broke it. So we break it, you break it, you bought it, right? That's what they say in the stores. If you break it. But it has broken this trend line. It hasn't broken the 21. And so we are neutral on it. We're still in an uptrend. So I'm short-term bullish and maybe longer-term bearish, but I can't take a sell trade unless I get some additional confirmation there, okay? All right, so that is bears versus bulls, the bulls versus bears, the weekly Forex forecast. I hope you enjoyed it. I hope you found it useful. If you have any questions, please put them in the comments below. Make sure you like, subscribe, and share this video if you found it useful and informative. Also, check out our website, the Elite Traders University, or elitetradersuniversity.com, and my market heat map. Okay, this is Dr. Greg McLeod, a 28-year trading veteran at your service. Bye now. Love y'all. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. we have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!